Hey everyone, welcome back to Corporate Decoder, the place where we dive into the financial reports of companies, so you don't have to. Today we're decoding a report that has more twists and turns than a mountain road. I'm talking about micromobility.com's latest filing. Get ready for a wild ride because this company has been changing direction more often than a shared scooter on a busy sidewalk. So micromobility.com used to be all about those electric scooters and bikes you see zipping around cities, but things have changed. They're now primarily focused on software development and business services, especially for the transportation and tech industries. It's a pretty big shift from their original plans. To understand the change, you need to know micromobility.com got rid of a lot of its old businesses. They sold Wheels Labs, their US-based micromobility operation. This happened in August of 2024 after they decided to stop offering scooter services in the United States because it was too expensive. It's not just the US, they also decided to get out of the European mobility market. In December of 2024, they agreed to sell Helbees Europe, which included their media operations, to an entity connected to their main shareholder. This deal is still waiting for approval from a court, so essentially they're shrinking down and changing focus. Now, about that new focus on software so far, they have only one client for their new software development services, Everly, an online grocery delivery service. And guess what? Everly is controlled by micromobility.com's main shareholder, Salvatore Palella. It's a related party, which means it is very important to keep an eye on potential conflicts of interest. That client brought in $1.4 million in revenue for 2024. As of the spring of 2025, micromobility.com has just 29 employees in total, most of whom are in technology and research. That says a lot about what they think their future is. Now for the not so good news, in March of 2021, micromobility.com took out a $15 million loan, and by the end of 2024, they were in default because they couldn't make the payments. The debt was sold to Palella Holdings LLC, which as we mentioned is controlled by their main shareholder. As of December 31, 2024, that loan had grown to $6.3 million with added interest. More debt dealings. In December 2024, another chunk of debt, including what was left of a convertible note and some fees, were also transferred to Palella Holdings LLC. In all, we're talking about roughly $9.2 million of debt now held by a related party. Back in March of 2023, micromobility.com set up what's called a Standby Equity Purchase Agreement, or CPAR, with Yorkville. This agreement allowed micromobility.com to sell up to $50 million in November of micromobility.com to sell up to $50 million in November of 2024. The relationship with Everly is a major focus for micromobility.com. Besides the software development agreement that is generating most of the revenues, Helbees Media signed a service supply agreement with Everly. Everly was supposed to pay around $7.6 million for some design development and communication services, but this agreement expired in March of 2025. It's not clear whether all the services were actually provided. Also, there is a separate 5-year service agreement expired in March of 2025. It's not clear whether all the services were actually provided. Also, there is a separate 5-year service agreement for Everly. Everly was supposed to pay around $76 million for some design, development, and communication services. But this agreement expired in March of 2025. It's not clear whether all the services were actually provided. Also, there is a separate 5-year service agreement for Everly to use the Helbees Media platform, worth about $14.5 million. But as of the end of 2024, Everly wasn't using the platform, and no invoices had been sent, so that agreement is potentially questionable. To keep things running, micromobility.com also got a loan from Palella Holdings LLC for a total of $1.6 million. Most of it was paid back in cash or by issuing shares, and at the end of 2024, about $200,000 was still outstanding. As for cybersecurity, the company says that they have not been affected by any cybersecurity incidents, which is good. They use monitoring systems and multi-factor authorization for user accounts. But as always, no assurances can be provided that there will not be incidents in the future. Before we look at the income statement, let's highlight the value of the company. As of June of 2024, the value of the company was around $600,000 based on the closing sale price. And as of the spring of 2025, there were about 92 million shares of common stock outstanding. All right, let's look at the numbers. The company has shifted their core business from mobility and media services to software services, so their revenues look very different between the years. Continuing revenues for IT services from related parties, $1.4 million versus $0 the year before. Discontinued operations revenue of about $1.5 million compared to roughly $10 million hand. General and administrative expenses are down about 85% due to a major restructuring effort and reduction in workforce. All this reflects micromobility.com trying to cut costs to stay afloat. Interest expenses are down as well. Micromobility.com reports a gain from extinguishment of debt for $822,000. Last year, the gain was $11.4 million. It has to do with renegotiating the debt. The number comes from settling debts for less than the original amount. SAPR financial expenses. Net decreased a whopping 98% as it is being used much less, so that's a relief. On the discontinued operations side, they had big gains close to $14 million versus $893,000 the year before. The increase is mainly related to the extinguishment of account payables, which means paying off old bills, and the gain from selling wheels. The accumulated deficit is $0.33 million. That shows you the total losses the company has racked up over its lifetime. The reason why the value of the company is low is because it has never been profitable. And finally, the total stockholders deficit is about $33 million. This metric is a way of saying the liabilities are overwhelmingly much larger than the assets. Turning to liquidity as of December 31, 2024, micromobility.com had only $390 in cash. That is not a lot for any company, especially one that's still burning cash. They're planning to fund their operations through more debt and equity financing. The company needs to keep raising additional money or it will cease to exist. Now, let's look at what the auditors say. Auditors are watchdogs that check and make sure that companies are stating their numbers correctly. And the auditors, Markham LLP, included an explanatory paragraph about going concern. This is a very serious thing because they're basically saying that there's substantial doubt about micromobility.com's ability to continue operating. That's not good. Okay, time for my analysis looking at micromobility.com. Here's my take. On the plus side, they're trying to reinvent themselves, shifting from a crowded scooter market to software and related services. The company has reduced its expenses, which was absolutely necessary. The bad news is their dependence on a related party for revenue raises conflict of interest concerns. They're in debt, and their auditors are questioning whether they can continue as a going concern. All this suggests that the company's current direction is risky. If they get the court approval, they're also losing all their valuable brands. So thanks for watching. If you enjoyed, please subscribe, like and comment, and let me know what other companies you would like me to analyze.